This is Nightly Business Report with Sue Herrera and Bill Griffin.
Bulls and bears, pessimism is suddenly running rampant. But is the growing negative sentiment actually a good sign for the market?
Calling a bottom, a longtime GE bear says the worst is over for the stock and shares embarked on a strong rally.
Closing the gap, why women and minority entrepreneurs are having a hard time raising money for their businesses and what's being done about it. Those stories and much more tonight on Nightly Business Report for this Thursday, December the 13th.
Good evening, everyone, and welcome. Stocks took a breather today from the recent volatility. The market flipped between gains and losses, and the bulls and the bears struggled for control. On one side was optimism over improving trade relations between the U.S. and China. On the other, concerns of a global economic slowdown. And by the close, it was kind of a mixed finish. The Dow Jones Industrial Average rose 70 points to 24,597. The Nasdaq fell 27, and the S&P 500 was down a fraction. Bob Pisani takes a look at some of the positive and negative forces in the market right now.
We kicked off the day with a rally of roughly 200 points, but there wasn't a lot of buying volume behind it. And by late morning, that rally had faded fast. The markets have been very indecisive recently. Investors are constantly weighing pros and cons with every new headline that emerges. There's been some new market negatives floating around. The big issue is still global growth slowing next year. But how much? It's very tough for experts to model earnings in 2019 without knowing the extent of the global slowdown. Then you have President Trump's potential legal problems. We saw the markets take a leg down yesterday on reports that the National Enquirer admitted it had helped facilitate hush payments to a former Playboy model alleged to have had an affair with President Trump in order to prevent her story from influencing the election. And today, the European Central Bank has made it clear it will begin to wind down its easy money policy next year, likely after the summer. But there's also a lot of market positives that are out there. Our own central bank, the Federal Reserve, is signaling fewer rate hikes in the new year. I think that's an important story. And then we have OPEC reaching a deal on more production cuts. Finally, tariff talks are still ongoing, and we've seen some real signs of China trade relief in the past week, including China's move to resume U.S. soybean purchases. So the overall tone is a bit more positive than it's been in a while. Finally, the latest investor sentiment survey out from the American Association of Individual Investors shows pessimism in the markets is at its highest level in 5 years. Now, that kind of extreme bearishness usually signals at least some kind of short-term market bottom. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And Brian Levitt joins us right now to talk about that sentiment figure. He's senior investment strategist at Oppenheimer Funds. Good to see you again. Welcome back.
Thank you.
I know it's dangerous. I learned long ago it's dangerous to try and pick a bottom in this market, but that high a pessimism number would seem on a contrary basis to suggest that that is one of the traditional benchmarks of a bottom in the market. What do you think is going on right now?
Yeah, and I think that's a good sign. And we've had a natural correction in the markets and sentiment got weak. A lot of that was around policy uncertainty. We're seeing some improvements. We're not all the way there, but it is good news that the Fed seems to be backing down. OPEC seems to have put a bottom in oil prices. We need to see more clarity on trade. It looks like we're taking incremental steps. All of that should set us up for a better time in the broad equity market. So
you would disagree with those who say, you know, we need another 10 to 15% to the downside in order for this market to equalize and for prices to become at least fairly valued?
Yeah, no, I don't think we need another 10 to 15% decline in the markets. Corporate earnings are good. The global economy is in reasonably good shape. Inflation's generally benign around most of the world. And valuations were just not all that excessive. You bring multiples down some in this correction. And, you know, earnings looks good given where global growth is and where the tax cuts left earnings. So it is not a bad backdrop for equities. I don't think we need another leg down.
But as we know, the market tries to sense what's going to happen in the future, maybe 9 months down the road. And there are some pretty high-profile investors out there. Jeff Gunlock, just to name one, the big bond investor who feels like we're heading to a recession by 2020. What do you think?
So I don't think we're heading into a recession by 2020. What I think is important is that the U.S. economy is slowing. Now, that's not a bad thing. 2018 was a year of very good growth in the United States, but tough policy. higher interest rates, and taxes. And 2019, in our mind, is going to be a slower growth environment, but a better policy environment. And that actually shapes up to be a better time for markets. In order for there to be a recession by 2020, you would need to see pretty high inflation in the United States, a Fed that's significantly raising interest rates, another significant leg of dollar strength. And given how benign the inflation backdrop is, and given that the Fed is pointing towards a very gradual rate tightening cycle, I find it very hard to believe that there's going to be a recession in 2020.
Very good. Brian Levitt with Oppenheimer Funds. Good to see you again. Thanks for joining us.
Well, the decline in both market and economic sentiment did show up in the most recent CNBC All-America survey. But as Steve Leisman reports, that's not stopping people from spending.
Americans plan to spend record amounts for the holiday this year, even while their views of the economy fell strongly from record levels. The CNBC All-America Economic Survey found that holiday spending plans topped $1,000 for the first time in the 12-year history of the survey, rising to a record $1,100 with gains spread across income, age, and regional groups. The survey of 800 Americans nationwide has a margin of error of plus or minus 3.5%. Respondents reported that those higher spending plans are largely the result of higher incomes, showing that rising wages and better employment, which is in the economic data, will mean more and maybe more expensive presents under the Christmas tree. Yet the survey also found that views on the economy fell the most in the survey's history. The assessment of the current state of the economy dropped a record 8 points on a quarter-to-quarter basis, with just half of the public saying the economy is excellent or good. And the percentage saying the economy will improve in the next year fell 5 points. Both numbers, however, remain at relatively high levels and might reflect a sense that the economy has slowed or that it can improve much more from here. The recent sell-off in the stock market dampened American views on the outlook for equities and depressed overall economic optimism. The message from the survey is clear. Santa's sleigh will likely be laden with overflowing bags of presents this Christmas, but next year he might be traveling just a little bit lighter. For Nightly Business Report, I'm Steve Leisman.
And those concerns over global growth came into focus in Europe. As Bob Pisani mentioned earlier, the European Central Bank today cut its growth target for the region amid increasing uncertainty.
The risks surrounding the euro area growth outlook can still be assessed as broadly balanced. However, the balance of risks is moving to the downside, owing to the persistence of uncertainties related to geopolitical factors, the threat of protectionism, vulnerabilities in emerging markets, and financial market volatility.
Now, along those lines, the ECB decided to end its historic stimulus program that was put in place during the financial crisis a decade ago. And interestingly, it also plans to keep its key interest rate unchanged, at least through the summer of next year.
And complicating matters for the European economy is the uncertainty created by Brexit. That topic dominated the EU summit in Brussels, where the British Prime Minister lobbied European leaders to support her Brexit program, something that still needs to be approved by her parliament to prevent a chaotic exit from the bloc. As we've reported, the British Prime Minister survived a no-confidence vote, but uncertainty around her Brexit plan remains.
Back here in the U.S., jobless claims dropped back to near 49-year lows. The number of Americans filing for unemployment benefits fell last week by 27,000 to a seasonally adjusted number of 206,000. Economists say that the tightening labor market increases the probability that the Federal Reserve will hike interest rates when it meets next week.
A report on import prices today reinforces the notion that inflation remains muted. The release showed a drop of 1.6% last month, and that was more than expected, and it was the biggest decline since mid-2015. This report also follows weak overall readings on producer and consumer inflation that we told you about earlier this week.
Time for a look at some of today's upgrades and downgrades. We begin with shares of Procter & Gamble tonight, which were upgraded to buy from neutral at Bank of America Merrill Lynch. The analyst there believes the stock's recent momentum is still sustainable. Price target now $108. The shares rose more than 2.5% to near a 52-week high at $96.49. Fellow Dow component Coke was downgraded to neutral from buy at UBS. The analyst says the many changes at the companies, raising the risk for Coke's growth targets. Price target now $51, and the shares rose nonetheless to $49.47.
Marvell Tech was upgraded to buy from neutral at Citi. The analyst sees gross margin expansion at that company. The price target is $19. The shares rose about 2% to $15.65. General Electric was upgraded to neutral from underweight at J.P. Morgan. The analyst removed the stock from its short idea focus list, saying GE's challenges are better understood. The price target, which is $6, which despite the upgrade is still the lowest on Wall Street. Shares gained 7% to $7.20. Morgan Brennan takes a closer look now at this call and GE's latest restructuring move.
Wall Street's biggest bear has called a bottom on GE shares. J.P. Morgan analyst Stephen Tusa upgrading GE to neutral from underweight, but keeping his $6 price target the same. The upgrade is significant since Tusa was the first to call GE's finances into question, downgrading the name in May of 2016 when it was still a $30 stock. Since then, its predictions have proved largely right, much to the chagrin of longtime shareholders. So why the change now? Well, according to Tusa, quote, key to the story, in our view, is the outcome of the known unknowns in near term, which are better understood and around which the debate is more balanced, as opposed to being overlooked by most bulls in the past. Still, he does believe the beleaguered manufacturer may have to sell new shares to raise more cash, even though new CEO Larry Culp said last month that wouldn't be necessary, given plans to sell off up to $20 billion in assets.
As John Wooden, the famous basketball coach, said, be quick, but don't hurry. And I think that's the mindset that we have. If we look at healthcare, for example, a tremendous franchise. We talked in June about an IPO there where we'd take 19.9% of the proceeds as cash. We have flexibility. We have options there.
But while J.P. Morgan's upgrade moved the stock, GE announced some news as well. It's planning to create a new independent company wholly owned by GE for its industrial Internet of Things software. The standalone subsidiary will get a new CEO, a new equity structure, and its own board of directors, housing the digital technologies that GE once spent billions betting would become its future. But the news after cutbacks in the GE digital business adds more clarity to the company's long-term plans, as yet another management team continues the difficult process of turning the American behemoth around. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
And still ahead, what's being done to close the funding gap for women entrepreneurs? There are reports tonight that federal prosecutors are investigating whether President Trump's inaugural committee misspent money. According to Dow Jones, the criminal probe is in its early stages, and it's also examining whether some of the committee's top donors gave money in exchange for access to the incoming Trump administration. The probe arose out of materials that were seized as part of the investigation into the president's former lawyer, Michael Cohen.
The president today took aim at General Motors, this time during a Fox television interview where he said the automaker would not be treated well. His comments were in response to GM's recent decision to cut about 15,000 jobs and close plants.
To tell me a couple of weeks before Christmas that she's going to close in Ohio and Michigan, not acceptable to me. And she's either going to open fast or somebody else is going to go in, but General Motors is not going to be treated well.
The president made the comments midday, and that's about the same time that the stock started drifting lower.
Renault's board says that Carlos Ghosn is going to remain as its chairman and CEO. Ghosn is under arrest in Japan for allegedly understating his compensation. He has since been ousted from Renault's partners Nissan and Mitsubishi. Renault says that its own internal probe found no wrongdoing by Mr. Ghosn in France.
Costco's earnings this afternoon are being viewed by some as an early glimpse into the start of the holiday shopping season. And as Leslie Picker tells us, the quarter was disappointing.
Costco shares slipping in aftermarket trading today after missing Wall Street's estimates on both the top and bottom line. Earnings came in about 1 cent below analysts' expectations, while revenue missed by about $500 million. The miss and subsequent stock price decline reverses some strength in Costco's shares, up about 20% over the last year. Costco had been beating expectations on comparable sales, reporting nearly 9% in November, far better than forecast, but the company has been struggling with international expansion and lower margins on gasoline. For Nightly Business Report, I'm Leslie Picker.
Delta's revenue may lose altitude, and that's where we begin tonight's market focus. Investors are growing concerned that the slowing global economies will limit the airline's growth, but the CEO says he expects the current strong demand to continue into 2019.
This will be the fourth year in a row this year that we're making $5 billion of profits, returning at 14% return on capital back to our investors, and it's going to stand the test of time. Who can do that through the cycle? And Delta's got a great lead on that.
Apparently, those comments were not enough for investors. They sent the stock lower by nearly 5% to 53.55. Ciena reported its strongest earnings and sales growth in years. The networking systems company expects 20% profit growth next year. The board also authorized a new buyback program of up to $500 million, and shares rose more than 8% today to $34.91. Meanwhile, Under Armour's CEO is making the case for his company's turnaround. Yesterday, we told you that the athleisure apparel maker had cut its financial targets. Well, today, the CEO said that he has a plan to regain momentum, especially in the North American market.
When we say becoming a global brand, we have to do that in our largest market. Like North America is central to that. And so we want to do that through innovation. We want to do that energy and excitement. It's things like Stephen Curry dropping and wearing, the new Curry 6 last night that he debuted in Toronto. It's products like the Hover upgrade that we have. So innovation is going to be the name of the game. The financial metrics are just a byproduct of what we do to make sure that we're delivering for that consumer.
Investors weren't exactly convinced on this one either. The stock fell 5% to $18.77.
The Justice Department has ended an investigation into SeaWorld's response to a 2013 documentary that was critical of the company. The Justice Department did not take any action against the company. Earlier this year, SeaWorld agreed to a $4 million penalty to settle charges that it misled investors. Nonetheless, the shares were down a fraction to $27.56. And after the bell, Adobe said a rise in subscriptions for its cloud software helped total revenue rise above expectations. Those gains also helped net income grow, but not at quite the pace that Wall Street was hoping to see. And so shares were volatile in after-hours trading. They ended the regular day up 1% to $248.08.
Certainly one of the biggest obstacles to starting a business is money. And for women, it's especially challenging since only a small portion of venture capital funding goes to female-founded startups. But as Julia Borston reports now, there's a big push to change that and to close the gender gap.
At Fortune's Most Powerful Women Next Gen conference, the spotlight is on the value of diversity. For every dollar invested, startups co-founded by women generated more than double the revenue that male-founded startups did, according to a BCG study. Despite the financial argument for diversity, 17% of startups in the U.S. last year had a woman founder, and 2% of VC funding went to female founders.
We have a long way to go to get to parity. But we are seeing a shift in the conversation and more people talking about, one, not only funding female founders, but also thinking about who are the funders around the table. And so we're having more of those conversations, more emphasis on that.
Half the investments in Ferreira's last fund, including Glossier and Daily Harvest, were female-led companies.
It wasn't Ferreira's mandate to invest in women, but she says she may have seen opportunities that her male counterparts didn't. One reason such a small percent of VC funding goes to women is that 9% of U.S. VCs are women, and about 3/4 of U.S. firms don't have any female partners.
New organizations are tackling this issue. All Raise focuses on women in VC as both funders and founders, while #Angels helps educate VCs and startups on the value of bringing in women's perspectives early and investing in diverse teams.
Our little cottage industry made up of small firms are highlighting the importance of diversity. They are finally getting it, and for that, I am ecstatic. We've got to make sure as an industry that those women and those quote-unquote diverse hires are not looked at as diverse hires, that they are looked at as incredibly productive and high-performing and equal members of the team.
Ibrahim sees a direct correlation between a more diverse set of funders and higher returns. Canaan's partners are 40% female, and 2 of their last 3 funds are top performing, driving optimism that the VC gender gap will close as people understand that diversity is good for business. For Nightly Business Report, I'm Julia Borston in Dana Point, California.
And a new report from Morgan Stanley also shows that there is a big gap in the investments women and minority entrepreneurs receive. So here to talk more about those findings is Carla Harris, Morgan Stanley's Vice Chairman and Head of Global Wealth Management and Multicultural Client Strategy. Good to see you again, Carla. Welcome back.
Thanks for having me, Sue.
What do you think is behind the results of this? Is it simply we're not at the table? Women entrepreneurs and venture capitalists are not at the table where they should be?
I think that has a lot to do with it, but I think, frankly, the reason why we saw the things that we did was that, as you just already articulated, there's not that much capital that's been flowing to women or people of color in the past. And as you know, that has been a very closed ecosystem. So unless you know somebody who was a VC, you had a hard time getting in the door. And if you got in the door, there was some bias because there was a lack of experience among those around the table making the decision.
Mm-hmm.
And along those lines, Carla, I mean, it's about relationships. But even if you gain access to the relationships that are important to gaining the funding, I keep hearing that the bar is higher for women entrepreneurs and people of color than it would be otherwise. Is that true? Is that what you found?
Our report certainly found that, and thanks for mentioning that. It was clearly the confidence issue was one that was cited as something that they needed to see. They, being the asset allocators, needed to see more in women and more in people of color. And it also, there was an implication that somehow these founders needed to bring a business that had been significantly de-risked. So our conclusion was that there was a perception in the marketplace that there was extraordinary risk associated with businesses that were founded by women and people of color, and that is a huge misperception, which is one of the reasons that we wanted to put the report out there to call that out.
But you've also brought some companies and some entrepreneurs and some venture capitalists in-house to try and work around that particular problem.
Absolutely. And I will tell you that our experience has been terrific. And in fact, it has proven out that there is not extraordinary risk associated with these entrepreneurs. Mm-hmm. To give you quickly a snapshot, our first class, we were 5 for 5. One company was bought 7 weeks after they were accepted into the accelerator. Another one was just purchased. A third significantly raised more money than they had intended when they came in. And a fourth did a very successful ICO raise. And the fifth went on to a very wonderful accelerator that focuses just on women, the Hearst Labs, and they invested even more money than we did.
I guess to coin a phrase, if you can't join them, beat them. That's how that works.
That's exactly right. Carla, thanks so much. Appreciate it.
Thank the both of you very much.
Carla Harris with Morgan Stanley. Coming up, the new space race reaches new heights. The Boy Scouts of America may file for bankruptcy as it faces growing legal costs tied to lawsuits alleging sexual abuse of boys within the organization. The Wall Street Journal says executives have hired a law firm to assist with a potential Chapter 11 filing. Now, such a move would potentially allow the Boy Scouts to pause lawsuits against it, giving it an opportunity to settle with victims who have sued.
Mortgage rates have fallen to their lowest level in about 3 months. The mortgage giant Freddie Mac says that the average rate on a 30-year fixed rate fell to 4.63% this week. But despite the most recent decline, rates for the 30-year are still higher from where they were a year ago.
Apple is expanding its footprint. The tech company plans to build a $1 billion campus in Austin, Texas. It's third in that city, and that will create about 5,000 jobs. And the company isn't stopping there. It says it's also opening 3 new offices in Seattle, San Diego, and Culver City, California, and expanding its operations in many more cities across the country.
Speaking of California, the utility regulators there have proposed taxing text messages. The group says that the revenue would help fund greater access to telecom services for lower income residents in that state. But it is unclear how far this proposal will get because a new ruling by the FCC classifies text messaging as an information service rather than a telecom service, which simply means the messages may not be subject to the utility agency's authority.
Richard Branson's space tourism company, Virgin Galactic, successfully flew its spaceship Unity more than 50 miles above California's Mojave Desert today, piloted by 2 members. Unity reached a speed of Mach 2.9, which is nearly 3 times the speed of sound. After the spacecraft goes through more extensive tests, Branson says he hopes to give others the once-in-a-lifetime opportunity to travel to space.
I would hope that sometime in the middle of next year, I'll be going up, and then quite soon after that, the public will go up. And we're building here in Mojave Eta and Arti, which is 2 new spaceships. So in the not too distant future, we'll have 3 spaceships operating from New Mexico, taking people up.
Start saving. Tickets are $250,000 apiece.
As long as he goes first, I'm okay with that. Take a look at the final day on Wall Street. Not as much volatility today. The Dow was up just 70 points, NASDAQ down 27, and the S&P was down a fraction.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.